Hey, Son Bell, let's bring co-anchor of CNBC's Squawk Box and the New York Times columnist, Andrew Ross Sorkin. Andrew, get some new numbers. Hopefully nobody gets fired for them because they are not as good as was expected. Tell us about them.
They are not as good as had been expected. In fact, it appears that inflation is creeping higher. This is really the second piece in the puzzle that we've now seen inflation creeping higher. And it's going to give the Fed pause now, potentially about lowering interest rates, just when it seemed like there might be some sense that actually interest rates might get lowered this fall. After this number, it may put Jay Powell in the position of saying, you know what, I'm going to hold off. It also, by the way, gives Jay Powell a little bit more material, if you will, to say, I wasn't too late. I wasn't too late, Powell, because I've been holding my fire. I haven't been doing anything, in part because I was waiting for more data, which is what he's been saying. The president, of course, very critical of Jay Powell, saying he needs to be lowering interest rates. One of the reasons that Jay Powell has said he didn't want to lower rates so quickly was he was worried about inflation. He was worried about inflation as a function of these tariffs. And I think you're starting to see that creep into the market. You know, for many, many months, we've wondered, when are we going to see that happen? And this may be, again, just another example of that first crack here.
So, Andrew, it's interesting. Yeah, we were wondering when this would finally come. It may be showing up. Maybe it's just a 1 month blip. We'll see. But, you know, what's so interesting is there was an opening on the Fed board. Donald Trump announced the replacement. The replacement, while suggesting he supported Donald Trump's tariff policies and said they were good for America, also he was a real hawk on inflation. Right. And he's been quoted as saying, I would much rather the economy grow more slowly than for Americans to be saddled with inflation for months and years to come. So even his own nominee is a hawk. So how does the Fed board do anything but, again, hold rates steady until we see if these numbers keep going up?
I think that's what the market's reflecting this morning, exactly what you just said, Joe, which is even with Moran on the board on a temporary basis, and he will be voting, that the chances are that this Federal Reserve is not going to be lowering interest rates so quickly. They're going to want to see another month of numbers to see whether inflation is actually rising or if it is steady. You know, the number we saw earlier in this week, people said, okay, it's okay. It's not going to be so bad. We could see little tiny bits of it. This is a higher number than people had anticipated, and that is the number that I think the Fed is going to look at and say, okay, we are going to wait, and waiting means, at least for now, interest rates that are not going to be lower. Having said that, I think it's important to say one other piece of this. It's not just that the Fed is only capable of lowering short-term interest rates. So sometimes you hear people say, well, my mortgage, I'm trying to lower the rate of my mortgage. I'm trying to lower the rate of, you know, how much the government is going to be paying for treasury. It's going to be very hard to actually change those numbers. So those are fiscal numbers. This is much more about sort of shorter-term duration stuff, if you will.
Andrew, I want to get your